Today's presentation, I'll give you a bit of an overview of what I'm going to cover. So, firstly, of course, Gruyere's had a pretty challenging 12 months. Started off with contractor equipment and staffing kind of shortages, and then we've come into this major rain event this year, and more particularly rather than a rain event, a protracted period of road closures, which has really dampened our performance in the first half of the year. Pleasingly, Gruyere is getting back on track, and we expect a much improved second half, and really looking forward to a very strong performance in 2025, and we're likely to get up to around that 350,000 ounces of annual production looking forward. Gold Road is, of course, maintaining its focus on value creative growth, and we, of course, hold a strategic position in De Grey mining, and we're also very active in exploration, and we're probably one of the few producers that is really doing new mine exploration out of the immediate kind of mine footprint. Gold Road's put quite a lot of effort into sustainability performance in recent years, and we've deliberately lifted ourselves from really where we were as a West Perth, junior explorer, commensurate with getting Gruyere into production, to really perform, I think, quite admirably amongst the gold peer group. In fact, ratings agency Sustainalytics places us above Barrick in our ESG performance. Gold Road has high levels of gender diversity, most notably at the board and the executive level, both of which are gender balanced. And we also have high Aboriginal participation in the organisation. Gruyere and our exploration team are ISO certified for safety and environmental management systems. We're a member of the UN Global Compact and one of only 12 mining companies in Australia that are members of the Dow Jones Sustainability Index. Most of the rest, of course, are in the ASX 100. So we should pass the ESG screen of all of the major investment funds and the major domestic and international banks. Turning to a focus on Gruyere to start with, as I've already mentioned, we've had a very challenging first half of the year, which came on the back of mining performance issues in 2023, which were really associated with equipment reliability and availability of labour issues. The labour market's had a massive change, really, with the situation in nickel and other commodities, and certainly that kind of era is behind us. The rain event in March really resulted in relatively minor impacts at the operating site, but unfortunately it resulted in the closure of the Great Central Road, which is our major transport supply line, being closed for a total of 7 weeks. Over that period, we were not able to get any plant reagents or fuel to the site. Mining, of course, focused on ore until the fuel basically ran out. Operations initially resumed in mid-April, and that started by freighting everything we needed through the Northern Territory, around about a 9,200 kilometre round trip from Perth. The operation progressively ramped up to achieve record rates of mining and processing in May, having got back to the normal state of operations. We're still, to some extent, in recovery mode. We've got a backlog of waste mining, and mining at the moment is very much focused on the stage pit 4 area, as you can see in this slide. That's mainly waste areas at the moment, and we effectively need to get the pit floor down to the same level of stage 3, and then we'll open up the ore supply, which will underpin really next year's performance. So once we're there, we really get down to sort of turning over half a bench a month, and we're very confident around delivery once we get to that point. Mining looking forward to there, and less important to the near term, is moving waste from the stage 5 pit area. That really secures all supply from kind of 2026 and beyond, and then in the longer term we need to start the stage pit area, 6 area, out onto the left of the slide in front of you. And that cutback will start sometime in the first half of 2025. Now, fortunately, with the rain event and the compounding effects of the road closure, we've taken a new look at guidance, which we put out notification to the ASX with our quarterly a couple of weeks ago. So we revised guidance of 290 to 205,000 ounces, which I note overlaps the bottom end of our previous production guidance. Gruyere very much still shooting to try and deliver against that original guidance. So the main motivation for us for looking at revising guidance was more around cost, and unfortunately we're seeing some cost increases across a few areas. One of them, of course, is royalties at a higher gold price. That's actually about $30 an ounce, so that's quite a bit of the uplift. We're seeing some increase in sustaining capex to build the TSF. Unfortunately, we've had some unexpected costs required to condition some of the clay material. We've identified some improvements that we can do so we don't get that as the future. And we've also had a number of basically non-cash adjustments feeding into the cost numbers, and they really relate to the fact that we're mining different areas to when we put budget and guidance together. And of course, we're processing more stockpiles than we thought we were going to as a consequence of the rain event and the delays to mining activities. So mining looking forward really is the key thing for delivery of Gruyere. We're very much in the mode at the moment of ramping up total movement rate to in excess of 65 million tonne total movement rate per month. And that's really essential to underpin Gruyere to what we see the operation should be as a 10 million tonne throughput through the plant, so processing 10 million tonnes of ore per year and producing in excess of 350,000 ounces of gold. Clearly, the delivery this year has been constrained by the availability of ore, and we've had to mix in low-grade ore to fill the mill. As I've outlined, so the immediate issue in the next couple of quarters is very much about stage 4 bench turnover rate rather than mining volume, but for the longer term it's about mining volume and meeting the stripping requirements of the operation so that we can confidently fill the mill. As you can see from this chart, we've had a good kind of improving trend in mining rates opening up since the road closures in March and April, which of course we basically achieved very little. So we're certainly ramping up to the movement rates that we expect. Unfortunately, we had a bit of a dip in June. We had a major engine failure on one of the primary excavators, but June also coincided to another brand new 600-tonne shovel being commissioned, and with that coming online, we effectively now have a spare excavator on site, which gives us a lot more confidence in reliable delivery. One of the things I will call out is MACA, under the new ownership of TIS, have really delivered at Gruyere in funding the capital requirements of the project. They've basically replaced the drill fleet, they brought the new shovel onto site, they provided a number of trucks and what have you across the fleet. Probably more importantly, we're seeing a lot of the TIS management systems, training and leadership coming into the site, which is really what you'd expect a Tier 1 contractor to be able to provide to their client base. So with Gruyere starting to get back to where we expect it to be, we're also focused on future growth options. Just staying within the Gruyere JV at the moment, so Golden Highway. This was basically drilled off by Gold Road over the last couple of years, so it's all basically sitting ready to be put into reserves. Within the JV, we're really working through all the kind of normal permitting, pit design, sort of technical studies. Most of this is kind of detail, but we expect this to deliver about 300,000 ounces, which will augment the ore supply into Gruyere. We're targeting to have all of that done by 2026. However, there are circumstances if we deliver well at Gruyere where it may make sense to actually defer Golden Highway, but we really want the optionality of having Golden Highway ready to go so that it gives us another level of confidence about the future delivery of the operation. Having done the drill off at Golden Highway over the last couple of years, exploration has been sort of suspended in the last couple of years at Gruyere itself. We're now back drilling underneath the pit. We've had a couple of rigs running recently, about 4 holes drilled so far, a couple of results you can see up on the slide there. Some of those are actually coming back with better intercepts than we anticipated. And really we see this as the big picture longer term for Gruyere. We're certainly going to look at the options of expanding the pit, and certainly you can see, the pit optimises out to the resource shell at a gold price of about $2,500 per ounce. But the mineralisation here is likely to extend off the bottom of this slide, and really that's the big potential. So we've already got 3 million ounces in mainly inferred resource sitting below the pit design, but it certainly could be significantly greater than that with further drilling at depth. Really, we see that's the way that you could turn Gruyere into a multi-decade, long-term underground operation. Clearly, it's going to be a bulk-scale underground mine with driving low-cost structures for all of that to work. Now, outside of the Gruyere JV, so the JV ground is illustrated in the yellow areas on these slides. We've got a couple of major regional shears, the Yamarna shear being the most prominent one that's mineralised over most of its strike length. The Golden Highway bit I've kind of talked to. So to the south of that is all Gold Road 100% owned ground, and we're starting to focus now on what we're calling the Yamarna Mine Readiness Project. Initially that's focused on Gilmore being the most advanced prospect, but really putting together all of the native title, permitting, approvals, infrastructure, with the mindset that we'll start at Gilmore, but ultimately there'll be a string of satellite deposits that will be developed in this belt over time. So Gilmore, busy phase of drilling out there in the first half of this year. We've now drilled off the main kind of resource area that we knew before the program started. We've got some ongoing programs planned now for the second half of the year based on some of the results that we've got. So the mineralisation is open still on the southern end. We clearly need to step out further to the south. We believe it's open down plunge off to the north of where we're showing that pit shell. And we think there's potential for some better grade mineralisation along the kind of Gilmore North area, where we've got some lower grade shallow results, but we believe that they may be partly lower grade to regolith-related kind of depletion of the gold. So still quite a lot of exploration to be done on Gilmore itself, and then over time we'll move on to those other satellite kind of prospects over time. So with Gruyere and Yamarna exploration really now moving to more of a sort of brownfields exploration strategy. We're very much looking to where we can discover mine 2. And as I've sort of said, I mean, Gold Road is really one of the few producers that's really actively out there looking for new mines. We're seeing some quite encouraging early stage projects in what are quite, new frontier kind of projects. Outside of the traditional kind of Yilgarn kind of territory. So the major projects I'm just going to talk to at the moment are Yamarna up in the north, so up in the Pilbara, Bolter, Greenvale and Galloway, both over in Queensland, and I'll cover those in a little more detail on the next couple of slides. So Yamarna basically setting up next to De Grey's project, so we're really looking for the same exploration kind of model. We acquired this property as a result of the takeover of DGO Gold, which of course was primarily motivated by getting what was originally at that time a 14.5% interest in De Grey. Our exploration since that time has been quite intensive. So last year we actually collected a full suite of geophysical surveys, we conducted extensive soil sampling, we completed 2 phases of RC drilling and a diamond drill program. So the team up there was actually pretty busy. We tested one target in particular right on the northern boundary of our tenements, where we intersected some very good-looking rocks, so 100 metre wide of intensely altered intrusives over more than 500 metres of strike length. Unfortunately, the assay results came back and it was kind of geochemically anomalous within the intrusion. But what we did see, a few high-grade veins, we effectively saw what we could kind of classify as a technical success. So we found, low-grade gold in rocks that looked like hemi, which is really what we were looking for, but not at the, an economic kind of tenor. So our exploration, we're validated, I guess we're still in the right kind of space. Our exploration continues, and we've got several more targets that have been largely identified by geophysics, so we're pretty confident that they're there. We've been doing very extensive heritage surveys with the Nullama people in the first half of the year, and we expect to be back drilling this property reasonably intensively over the second half of the year. Up in Bolter, so we're up in the Murchison here, so inland from Carnarvon. We're not in traditional kind of gold country, but what we do have is 2 5-kilometre golden soil anomalies. We've done some recent mapping and kind of prospecting work up here on the ground. We've got multiple kind of, anomalous, results from that mapping exercise, including some spectacular results of up to 37 grams per tonne, basically sticking out the ground, which you don't kind of find that still in the Yilgarn. So unlike the Yilgarn, this is not hosted by greenstones. It's in high metamorphic grade rocks, which have a number of technical analogies to the Tropicana deposit, and I guess that's kind of the sort of the model that we're looking at here. We anticipate getting drilling up at Bolter again in the second half of the year. Across in Queensland, so Greenvale project, really we're looking at intrusive related gold systems over here. The best deposits up in Queensland that were mined historically include Kidston and Mount Lation, and most of these are hosted within diatreme complexes, and that's broadly the geological model that we're looking for. At Greenvale, there was limited drilling completed by Normandy Mining last century, so back in the 90s, and they certainly intersected mineralisation within one of these intrusive complexes. 60 odd metres of a gram would get you reasonably excited these days. The property really over the last 20 years has been held by prospectors. Very little exploration done, although there was one single hole drilled, looking interestingly for diamonds rather than gold. And what they'd intersected was this multi-phase brexia, which is the photo of the drill core up in the image there. So not a lot of gold mineralisation in that, but it says that we're really in the right rocks, and within that intrusive complex, there's certainly gold mineralising fluids. So we think we simply need to be drilling a bit deeper than what was previously done, and it's a pretty good kind of target. Across that, Galloway, so also up in North Queensland, we pegged this as open ground, and really our first field work has just started up on this project. Very encouragingly, first field trip picked up a rock with 53 grams in it in a multi-stage brexia, which is the picture on the slide, and that's not far away from a historical drill hole that stopped at 43 metres in mineralisation of 8 metres at 4 grams. So you don't typically find things like this just kind of lying around in the country anymore. The areas have a reasonable amount of base metals exploration by CRA and others, but not really a focus on gold. However, some of that data can help lead us into the target areas for us to focus on. So if I can just wrap up with my final slide, Gruyere very much getting back on track with improving mining performance after the protracted period of road closures. We've got a bit of a catch-up on waste mining required, but we expect Gruyere to get back as a high-performing operation, producing around 350,000 ounces a year of low-cost gold from 2025 and beyond. While our exploration projects are larger scales, each of them, I think, has got the potential of being large-scale discoveries from relatively simple work, particularly in outcropping terrains. Our strategic investment into Grey, of course, provides us with a seat at the table in the development of the Hemi asset, and despite the challenges of the last 12 months, Gold Road remains a strong balance sheet. We're debt-free, unhedged, and able to capitalise on the strong gold price.